Good evening and welcome. I'm delighted that you could share the next hour with us. My name is Ginger Fay, and I'm the Global Director of Partnerships at Appleruth. We're an education company, and we love working with students as they pursue their academic and personal goals. I'm delighted to be joined tonight by a wonderful colleague, Melissa Mieyr, who knows everything there is to know about paying less for college, is going to cram a lot of information into the next hour. If you have questions along the way, I hope you'll put them in the Q&A box. We don't use chat, we use Q&A. So please put your questions in. And if you would like to use closed captioning, that should be available on your side of the screen as well. So welcome. Let me just begin by telling you a little bit about Appleruth, and then I'm going to tell you a little about Melissa, and then she's going to tell you a lot. So Appleruth has been around for just over 20 years, and we work with a really fundamental belief that if you change students' self-belief, you can change what's possible for them. Because once students believe in themselves, they have the confidence to accomplish whatever is in front of them. And we love helping students achieve their goals. We love especially working with students who are at an inflection point, at a point of transition in their lives, and particularly in terms of their education. So we do three things. We work with students in three different ways. We help students with academic tutoring. We work with students usually as young, even as like third grade, and then all the way through college. Our tutors really love getting to revisit some of their favorite subjects with their students. We help students with high stakes standardized testing preparation. So we help students with the SAT and ACT, as well as younger students with the SSAT or the IC test, and older students with the GRE. And we also do executive function coaching, which is helping students develop the organizational skills so that they can do their best work at whatever stage they're in. So we're here to build better learners for life. And we try and do as much as we can to spread good ideas and information in this space. And we invite wonderful colleagues and friends and partners in this space to join us in sharing information. And that's why Melissa's here. So Melissa Mieyr is a college planning advisor who partners with families to help them attain their academic goals while maintaining the family's financial stability, which is a really important balance to strike. She spent over 25 years helping students explore their academic and career options as an educator and certified school counselor. So Melissa knows everything there is to know about helping students achieve their goals and helping families do that without breaking the bank. So I'm grateful for Melissa's leadership in this space within our sort of work in education and advising students as they seek higher education. And I'm thrilled that she could take a quick break from reading college essays and supporting students as they're submitting applications heading into these early deadlines. So Melissa, thanks so much for being with us. I'll look forward to rejoining when we get to the end and are able to answer some of the questions that'll be coming in again through the Q&A box. So pop them in as you think of them. Melissa, the floor is yours.
All right. So as Ginger said, I have been in education my entire career, and I love working with students and families and much more closely these days as I am out of the school setting and into the independent consultant role. I really do enjoy being able to pair with them, and my teaching field was business and technology, and then I rolled into the counseling side of things. So that is why we are talking about finance tonight, that it is a passion of mine, and making sure that we do this the way our families need us to do those, and be on a financial budget if we need to, and understand the whole process. So as I just mentioned, I want you to learn how to save on the cost of college, not just for the cost of college. So most families, I think about planning and saving, but they don't necessarily think about saving on the cost of college, reducing that cost of college. So that's one of the things that is the thing that we are going to talk about tonight. So this college planning whole process, there are two aspects to it. There is the financial planning and there is the admissions planning. So you really can't do one without the other. You don't want to plan the admission side in a vacuum. We really have to understand the financial piece to get the best overall outcome on the end. And so we're going to focus on that financial planning piece tonight. So the concerns that I hear over and over again, and I work with families helping them understand how to do these things and how to best get through this, big task that it is how do we pay for college in an affordable way? And how do we afford that? And how do we pay less for college? So how do we do it in the most efficient manner? And then how do we do this and not wreck our retirement? Um, Parents are, kind of thinking about those retirement years fairly soon. And so we want to think about that and not be a burden to our kids on the other side of all of this. So we want to make sure that we are maintaining the big picture of our financial outlook and not just the college piece of this, because we can end up in a bad situation. Because as much as we don't like to, we can actually take out loans for college, but we cannot take out a loan for retirement. It just doesn't work that way. All right, so there are three aspects to finding that right fit. Financial is a big one, and that's the one we're talking about tonight. The academic and the social piece, we have to have all of those to make the school or the list to be the best it can be for our students. So no matter what, college is expensive. So I'm have an example here of like a kind of a normal state school price and then kind of a mid-range private. So when you multiply that by 5 years, that gets pretty expensive. And this is for one child, but what if you have 2 or 3? Then it gets really, really expensive. And a lot of people don't think about it, but it is the next largest expenditure after purchasing a home. And we need to process um, this whole purchase like that so that we really do think through the process and put more time into it than on a whim making a choice. So, how many parents out there would hand their child their checkbook or credit card and go, say, to any dealership that they wanted to and buy the car of their choice? I bet there would not be many of you that would actually do that. You would go, no way. So that means you shouldn't be doing that for college either, because it's a much bigger ticket price than a car. You're basically buying 4 cars, one each year. You're buying a economy car or an average car or a luxury car, and then driving it off the cliff at the end of the year and buying a brand new one. Okay, so a few terms that you want to know throughout this process. I'm going to take some notes tonight. So the first one being the cost of attendance. So it comes in 2 different aspects. So we've got our direct cost and our indirect cost. So our direct costs are going to be those things that are basically you're handed the bill for. So tuition and room and board. So most colleges require students to live on campus at least the first year, if not more. So you are handed the bill for that. So you really don't have a lot of control. Yes, you can pick a meal plan and a different dorm levels or whatever, but those are direct costs. Whereas the indirect costs are going to be kind of fluctuating, but colleges do estimate those indirect costs. So you're going to get a whole picture of what that might look like. And that's called the cost of attendance. So all of those things need to be taken into consideration. So the next term is expected family contribution. And this term, expected family contribution, or EFC, will actually be changing when our new law comes into effect on 2024. So it will be called the SAI, or the Student Aid Index. So it's going to be the same thing. They're changing the name because of a lot of people misunderstood what it actually is, because it truly is an index for colleges to say, okay, this family, this is the award package that they get. And so it's not really necessarily exactly what you're going to pay. So that's why they kind of are changing the name to clear up that misunderstanding. So 3 different kinds of EFC that you need to understand. There's the federal methodology, which is put forth by the U.S. Department of Education. And that calculation slightly changes every year. And then there is the institutional methodology and the consensus methodology. The institutional and consensus methodology are both derived from the CSS profile. And we're going to be talking about both of the different forms here in just a little bit. but the EFC for institutional and consensus come from the CSS profile, but they just do things a little bit differently. So there's a very small group that utilize the consensus, and just understanding that there are different methodologies and understanding what that looks like depending on the school list that your student has. And so this is a picture of the software that I use with my families. We do a pre-read so we understand where we stand going into this game, which is very, very important, is understanding where you are prior to making your college list or while you're making your college list. And so knowing that you have your EFC in mind when you are making your list, and then look at those schools. So the reason why this matters is you want to know where you stand with each and every school on your students list. And so we take the cost of attendance minus the expected family contribution, and that equals the need. Okay, so it's really important to understand that your EFC is your EFC. It's not going to be changing. It's the cost of attendance that is changing from school to school. So therefore, your need at each and every school is going to be slightly different. So the next terms that you need to know are the different kinds of financial aid. Okay, so we have our self-help category and we have our gift aid category. So I like to say this by LEGS. LEGS is the acronym, okay? And so loans and employment, or our work study, those are our self-help items. So loans, obviously you're gonna pay back. Employment, student's gonna work and turn around and take that and pay it back to the school to help pay their bill. And then the gift aid, those are the things that we are really wanting to get because those are the free money. Grants and scholarships are going to be things that you are not going to have to pay back. And so that is going to be to your benefit to have gift aid. So we want to look at all of those different things. So this is a snapshot of a list of schools. This is, again, my software that I utilize with my families to help them go through the research process of understanding where they stand with each and every school on their list. So you want to know, what is the cost of attendance? What is your expected family contribution, and what methodology does that particular school utilize? And so then that gives us our need, as I mentioned, the formula. And so then we know what potentially the schools are going to give. And so with the families that I work with, we dig into those stats. So the software platform that I use, I have all of the stats in there, what historically the schools are giving. And so we can calculate potentially what that is going to be. And then also, is the student, based on their merit, based on their GPA and test scores, what merit-based aid might they automatically get? And then there are things that are going to be semi-automatic or also competitive kind of scholarships, but we want to know where we stand so that you know what that net cost is going to be for each year. And that's 1 year that you're seeing in that last column. We want to look at all 4 years, which is really important. So another piece of that puzzle that I work with families is then, what does that look like over 4 years so that you can understand the amount of money that your family is going to have to pay for college. Really important pieces. So what are some of the big influences on financial aid? So number one that is calculated is your income from your tax return. Okay, so if you make contributions to your retirement, so you put money back in your 401k, that actually gets added back into the formula, okay? And then parent assets, non-retirement kinds of assets, are also part of that look at. And a 529, the student is a beneficiary and they've done you a favor and they're only counting it under the parent asset side. You're going to see why that matters here in just a minute. And then currently, this is the last class, the 2023 class, that this will be in effect, and the new law goes into effect in 2024. Currently, when there are multiple children in school, the EFC, that has something to do with the EFC, but that is going to change in the 2024-2025 school year. And then students' income and assets also count in the formula. So if a student has, if a parent has gifted them money like an UTMA or an UGMA, that is a parent, that has been a parent gift to the student. That is an asset of the student. So it is going to count much more heavily in the formula. And then right now, the law is that grandparent donations or other family member donations do count in the formula. But when the new law changes for 2024, that is something that is going to go away. And so the reason why I talk about the different assets in parent versus student name, why that is important, is because they count differently in the formula. So you want to make sure that you understand that. And if you are in a situation where you run your numbers early, you might be able to do something different in your financial picture to make this a better situation for you. So you can see if the same $10,000 were in the parent name versus the student name, how that would be assessed in the formula and the potential loss of aid that you could see, where it's much higher on the student side versus the parent side. So I mentioned timing. So the calendar is very, very important in this process, really paying attention to what calendar year counts during this whole process. So people always ask me, am I too early? You're never too early to think about college financial planning, never. So the moment that your child walks through the school doors of little pre-K, you need to really be thinking about this, even earlier even. But you really have to pay attention to that sophomore spring through junior fall. That is the tax year, that is the base year for this whole process. So if you need to do something different with your financial picture, that needs to happen prior to that. Okay, so you have to start thinking early, like in the freshman year, about all of this. And you may not know the exact list, but you can do your research of different possibilities of schools. And so really do think about if you have a retirement plan distribution that might be coming around the corner, that is going to affect you, and that is going to be counted as income. Employment bonuses. If you have control of when you're getting your employment bonus, you want to be careful about that coming during that first year, that base year for college. And if you have stocks that you want to get rid of and disperse and exercise those stock options, again, that's going to be income coming into your pocket, and so it's going to affect the formula. Then also, if you have an UTMA or an UGMA, which is a student account, and you wanted to change it over to a custodial 529 so that it would be in the parent's asset pocket instead of the student asset, you have to do that prior to that base year, because it's going to show up in on your tax return, and it's going to affect that formula. So also, I tell my single parents, you probably don't want to get remarried during this process, because the new parent becomes part of that household, and their income and assets are accounted for in that formula. So you need to realize that and understand that if you make that choice. And then also students, if they are earning over the asset protection allowance, then that is going to be counted as income on the FAFSA, and and then it is going to weigh 50% in the formula. So those things can weigh a lot. And currently we're about $7,400. And when the new law comes into effect, they're going to raise it pretty high. And it does go up incrementally each year, but it's going to jump a bit. It's going to be over $9,000. So we're getting a pretty good jump when the new law comes into effect. So here is a calendar. And while you look at that, I'm going to take a sip of water. You can see college year versus tax year versus when you file the FAFSA and when you're receiving that award notice for those. So you can see what piece of documentation, what tax documentation year you need for which school year in this whole process. Okay. So something that I want you to think about. I am not saying do not pay for your children's education, but this comes back to the part of doing things most efficiently and understanding the rules so that you can get a better deal and use that leftover money to put away for your retirement. Because you can see right here, this is if you put away this amount of money in your retirement account and it was growing at a 5% interest versus utilizing it to pay for college, this is what you would have in 15 years or in 20 years with that amount. So if you could get a private school for the public school price or a more elite private school for maybe a regular private school price, wouldn't that be a better deal and the amount of money that you could save and put in your retirement so that you have a better situation on the other side and you're not a burden to your children? Okay. So I want to demystify a few myths. So I want to go through a couple of these. So a lot of times parents and or students think that they're going to get more money than they actually are. You have to do your research. You have to know which schools are givers and which schools are not givers. And this misnomer of a full ride, there's not too many of those out there. It's just not going to happen. And so many families put so much money into sports and those kinds of things, hoping that they're going to get sports scholarships and be able to utilize that. But it's really important to understand that those full rides, there's not, large numbers of those things out there. So it is really important to understand what you are going to get. And also on the sports side, if you have a student that is an academic student as well, you really want them to have academic scholarships versus athletic scholarships, because what if they decide this is too difficult for me to complete my degree in my, for my profession and stay in my sport? If their scholarship is sport related, they're going to lose that. Also, what if your student became injured and then could not participate in their sport? And then that gets taken away as well. And so then you've lost that money that you were hoping to help pay for school. So it really is more about the academic side of things, hoping that you have those academic scholarships versus the athletic scholarships, because they may not always stay with you. And also coaches change from time to time and programs completely change. And my niece is a college athlete and has experienced some of those lovely changes that aren't always the great ones. So another thing I get asked all the time is, can't my child be independent? I don't claim them on my tax return. It has nothing to do with who claims who on a tax return. A student cannot be independent until they are 24 years of age. They are married, they have a child that they support at least 50%. They've been in the military, veteran, they are in graduate school, meaning they have finished their first bachelor's degree and gone on to graduate school, or they were a foster child award of the court. So otherwise, you have to supply parent information as part of this process. So will you qualify for aid? It is all going to depend on how expensive the school is. The more likely you are, the higher the cost, the more likely you are to qualify for aid. So I'm going to show you a little example here. So you can see right here, here is a high income family and a middle income family, okay, that have some assets, both have some home equity, and have the same size family. And you can see what the federal EFC is and the institutional EFC is for both families, okay? And then the example at the bottom, you will see in-state school, out-of-state school, and a private school. So just 3 levels of different cost of colleges. And then you can see what the EFC would be for each of those schools. So you can see even on the high income family that there is still some need for that higher dollar school. So don't discount the fact that you are a high income earner. You always want to do a pre-read and understand what your EFC is going to be, because you don't know if you are going to be in that place where you are actually going to have need. So the more expensive the college, the more likely you are to have need. So talking about different types of families and different types of students, we have 4 different quadrants here to look at. So you've got high merit, low need, low merit, low need, high merit, high need, and low merit, high need. So each quadrant has different things that they can do to put themselves in a better situation. So I'm just going to cover all the different options and talk about what that would be. So non-need merit aid. That means merit aid based on the student's academics, you know, their accolades, their GPA, their test score. Private scholarships. Private scholarships are outside scholarships, okay? School selection, making the right choices of schools. So knowing which schools are givers and which schools are not. Some schools are need-based givers, some are merit, and some are a blend. So what kind of schools are on your students list? Obviously, Ruth is doing this workshop tonight, and test prep is a big thing that the student can do to help elevate those opportunities. So really, really important to think about that. And then also there is potential of tax aid. So you can potentially do things, you can get tax benefits for different levels of income. So that may be something as well. So then on one of the other lists, we see 100% need met. So looking at schools that are very high percent need givers, if you are a family that is in need. So that's what you want to look for. Those are the kinds of schools that you want to put on your list. Merit-based aid. So again, merit-based aid is aid that is given based on the student's merit. And then EFC reduction. So I talked about where money goes for parent versus student and those kinds of things. Those would be things that you would look at is, can you reduce your EFC in any way? And then timely application, okay? Timing is everything. Early is better. That old adage, the early bird gets the worm, is so true. Really, really important. So I've highlighted each one of those things that you see on the different quadrants on what they are. So you just need to look and find out what quadrant are you and understand what your family needs to do to be in the best situation. So this is an example of not being afraid of what the actual sticker price is based on what you see there. Is it really what you're going to pay? You have to understand, you need to know what percentage of need is the school going to meet and how is that being given in gift aid versus self-help. So I've got 2 schools here, prime example of a public school and a private school. So we've got our costs for school A, $30,000, EFC $20,000. So there's $10,000 of need. and the school is meeting 50% of that need. And then they're giving 50% of that need in gift, 50% of that need in self-help. So we take all those pieces, put them back together, add them all up, and we come to our $30,000 that it costs for school. But we get to take away the gift aid because it's free. We don't have to give it back. So that family is paying $27,500 for this school. Okay. For our school B, cost is $60,000, the same EFC, $20,000, but our need is $40,000. The school is going to meet 100% of need. They're going to give 80% in gift aid and 20% in self-help. So again, we add all of our pieces together, we come back to our $60,000, but we take away the $32,000 that we're getting in gift aid. And you see the family is going to pay $28,000, but those sticker prices were much different from one another, but the bottom dollar is very similar. So do not be afraid of a sticker price. Know the school, research the school, know what kind of givers they are in those realms. So another thing that can really impact the cost of college is how long it takes to finish college. So 40% of students do not graduate in 4 years. So we really have to think about, how is this going to play out? And you will see on stats, when you look up schools, they have a 4-year graduation rate and a 6-year graduation rate. So you want to understand what that school list looks like for your student. Where do they stand, and what kind of expectations do you have of your student, and what kind of conversations are you having to make sure that these things happen? Because not only are we spending more time in school and it costing us more money, because in this example right here, our 6-year school was a $30,000 a year, and our 4-year school is a $40,000, but it ended up being less because we spent less time in there than we did if we were at the 6-year school. And I will tell you, just kind of statistically, your public schools have that little bit higher ratio of hitting that 6-year rate than a private school on the 4 years. So really, really think about that. But the other aspect is the economic impact of that young adult not being in the workforce. So not only you're paying for another year or two of school, they're not out in the workforce making an income themselves. So think about that as you are creating this list and having conversations. And also, things like dual credit, AP, IB, are they counting for something on the college side to help reduce that time in college? And so why does this play out this way with private schools versus public schools? They are trying to compete with the lower price state schools. So they are willing to give a bit more, and they're competing for those same schools. They have more money in their purse, and they control the purse strings. And so they make the rules. And so they get to do what they want to do with it. And so they are just bigger givers. So a lot of times I get the question about private scholarships. More money is going to come from the actual school than outside scholarships. So that's why it is so important to do this early, making your list, doing your research, and understanding which schools are givers, because your money is really going to come from the college itself. It's not going to come from outside resources. So only about 7% of money is going to come from private entities outside of the actual school itself. So really important to understand that concept, because it's not as big as most people think it is. So This process absolutely can be overwhelming. And if you don't have the knowledge, you're going to potentially make mistakes. So the first step is participating in this webinar tonight, is gaining that knowledge. And so continue to do your research, understanding if you choose the wrong schools, that you could potentially be paying more for school and not get the discounts that you are hoping for. And you want to make sure that you have a strategy to cover the shortfall. How is that going to happen? So then we're going to talk a little bit about the forms that you utilize for the financial aid. So the number one form is the FAFSA. So the free application for federal student aid. Okay, so everyone should submit the FAFSA, because most people don't realize if you plan to take out student loans at all, you have to have this in place. That is one piece of that. Also, I've had many families where their family circumstances change throughout the year, and it's so much easier to go back with a change of circumstance than to have to scramble when things are in a bad situation for the family to get through this process. So really important to put that in place. And also you want to make sure that you are submitting it accurately, reading the instructions carefully. There is a PDF version that has all the details on it. When you're doing it online, all the details right there. So one of the things that when I work with families, we make sure that they understand what goes in every blank, what they should be placing in there, and they understand those things. And also it opens on October 1st, and you want to submit very soon. And my goal for when I work with families is getting it done by November 1, because we have many of those early action or ED deadlines that we want to make sure, because of scholarship priorities and things like that. So they want priorities by November 1. So then we have the CSS profile. So the CSS profile is also a form that is used by about 250-ish schools, and it is a more detailed form, and it does actually cost to do this form. It's a $9 registration fee and $16 per school. So the first school is $25. And then each school thereafter would be $16. Now, if your family's AGI is $100,000 or less, it is actually free to you to complete the form. So this is a much more intrusive form as far as what they ask for, much more detailed. Also, there are schools that ask for other additional information. So institutional aid documents. So some schools have their own forms that they want filled out. Some of them have verification documents, and basically they're trying to look for inconsistencies within the file. And then there may be additional things like business or farm information, and also non-custodial parents. So if you are in a two-household family and you are filling out the CSS profile for any schools, the non-custodial form does bring in the other parent. So that is really important to understand, as well as many of the CSS profile schools do include the non-custodial parent as part of that process. You can Google CSS profile schools, and you can see all the schools that are utilizing that, and also the ones that use the non-custodial portion of that. So again, understanding which schools are going to be best beneficial to you. So why do we need to know these rules? So this is a prime example. I found this on a social media site not too long ago, about a month or so ago, and I wanted to cry when I read this, because this is what I help families not do, is do this. And so, hi, I have 2 kids in the same college. I have numerous times for a discount. They missed the word ask for a discount. One is a freshman and the other is going to be a junior, transferred from another college. I am dipping into our savings and cashed out my 401k. Their tuition is going to wipe out our savings account. Is there anything I can do better than wipe my account out? Thank you. So please, please, please do not be this person. I was just so sad when I read this, because if you've done your research, you know which schools are going to fit within your financial picture, and you can have those conversations up front with your child. And it's a lot easier to have these conversations up front than to have your kids go through this whole process and then squash their dreams on the other side. Whereas if they know if they don't get the dollars that your family needs to make it a viable choice, they know up front that it's going to be removed off of the list. And so it's a much easier conversation up front than on the other side of this. So please don't be this family. So kind of the steps, understanding how the financial aid system works. And again, tonight was the first step of that, understanding how a student has control of that. So their test scores, their GPA, their rigor, their activities, all those things matter. Creating a plan. So having that plan, identifying colleges that are a financial fit for your family, completing all the forms properly, and paying for college using the most cost-efficient manner. So making sure you're doing that right. So please, please, please do not rely on luck. Hope is not a plan. It doesn't get you good results on the other side. So really important to understand the rules. It's just like when we fill out our tax return, we use the laws and the rules to our advantage to be in the best position that we can be in. So if you know what they are, you can use them. So really do use those things. And it's so, so important to look at your family situation, know what your goals are, and go through that process and know what the obstacles could be before you get there. And like I said, having those conversations and find out what works for you. Where do you stand? What can you do differently? What can you do to make your student understand where you're going to be in this whole process? So one thing that I want to offer you tonight is I have a free tool for you to start looking into seeing what you have in your picture. Is you can use the QR code on the right of your screen to do your free money report. So this is a tool that's going to answer 4 critical questions. It's going to give you a 10-page report, and you're going to be able to choose 3 colleges to look at. And so I recommend that you use different kinds of colleges. Don't use all the same kind. And if you qualify for grants or scholarships at those schools, and what your family is going to be expected to pay, and then what are some other could be some other affordable schools. So you're going to get this report, and so please utilize this so that you can kind of get a start and a running start on this picture. And then over on the other side is my information if you would like to reach out to me for more. But now we're at a time for questions.
Sorry, Melissa, I was busy trying to get my college money report. But we can jump into questions. Okay. Thank you so much for all this great information and such good resources that you've shared with us so far. We've got lots of great questions coming in from the audience. So I want to get through as many as we can in the next little bit. Can you talk a little bit about the software platform you use? Is that something that families need to be working with you to be able to utilize, or is that something they could utilize on their own? And what would you recommend about resources and things like that?
Right. So I use a platform called College Aid Pro, and I use that in my practice. And when I utilize that, I walk a family through the whole process and go through that step by step. We have meetings. We go through that individually. There is also a free version out there that you can utilize, and College Aid Pro is out there as well. But if you're working with me, you're going to get that walkthrough process. Okay.
Thank you.
Oh yeah.
Are there other resources that you would recommend for families that are trying to figure out what their EFC is, so they can have that important conversation about expectations from the beginning? How do you figure out what your expected family contribution will be without necessarily actually going through the application process, right? If we need to do that ahead of time, how do we do it first?
So obviously, if you use your free money report and put in accurate numbers, you're going to get that. Also, College Board has an EFC calculator, which runs both the federal and the institutional. So you can utilize that. That is the best way to get that information. One of the wonderful websites that I love is collegedata.com. I just absolutely love their website. They've got lots of stats for the financials. So it is a great tool.
I think those are all good resources. I used to love the FAFSA forecaster. I know they took it down, but you can still on finaid.org, you can still get an estimator for your EFC. And my husband just did it the other day, and it literally, I don't think it took 5 minutes. And it was not surprising. I mean, it felt like the right number, even though the government and I have maybe some different ideas and expectations about things.
There are also net price calculators on some of your college websites. Some of them are not very detailed, and some of them are detailed. And the more information they are asking for, the more accurate they're going to be as well. So, and I have had ones tell me that they're not always right perfectly up to date. So you do have to kind of, take that number and know that it's not necessarily 100% what you're going to get, but it's a good outlook at least.
Exactly. A good start for the conversation as well. If you aren't aware that what Melissa was just talking about, a net price calculator, NPC is by law has to be available within 3 clicks of a college's homepage. But if you just Google college name and NPC, you'll find it. So Melissa, can you remind us, how much does parental income weigh into that expected family contribution?
It is a varied scale, so it's not an exact percentage. So like assets are a certain percentage, it varies. So anywhere from the mid-20s to 40%.
Thank you. Some advice for parents who have their own business. If you have an LLC, for example, and let's say, I don't know, you're self-employed as like an educational consultant maybe, and there are times where your income looks terrific because that bank account is flush and full, and then you use the money in there for business expenses, and then it's not so hot. So are you having to share like the actual bank account information, or as a business owner, are you submitting tax returns instead?
So when you're a business owner and your students are applying to schools that utilize the CSS profile, there is several questions that are asked for. Basically, if you have your profit and loss statement and different things off of that are going to be asked for in a business situation. And, as a business owner, some years are good and some years are bad. There is always an opportunity for an appeal, change of circumstances, if 1 year is good and 1 year is not so good.
Thank you. That's helpful. We've got a couple of questions about timing. So we've again been talking about primarily 2 forms, the FAFSA, which stands for Free Application for Federal Student Aid, and then the CSS profile, which is put out by the College Scholarship Service, which includes your friends at the College Board. So when is the right time to fill those out? Is an 11th grader supposed to be doing that now? Is a senior supposed to be doing that now? Or can they wait until they find out where they get in before they fill out those forms? Can you remind us a little bit about that timing?
So that timing is going to be senior year, October. Okay, that it opens up senior year, October the 1st, and you will actually fill it out every year, the year prior in October while the student is in school. That will be a continuous project throughout that whole time. But October is kind of that time period, and I always recommend trying to get it done before the end of October each year. That way it doesn't slip by.
I think that's great advice. And I think one thing you said early on that I would absolutely amplify is first come, first served. A lot of states have their own deadline for students to file, and then schools will have their own deadlines as well. But sometimes money runs out before you get to the deadline. So I think it's helpful to do exactly what you're doing, recommending students do and families do, to apply basically for financially at the same time the kids applying to college. And that way you'll be able to make a real comparison, just like those examples that you were showing. So you can see, is our bottom line as a family, very similar or very different for these schools? So that's very helpful. Thank you. Okay, this is a question I'm going to give you because I don't know what DRT stands for. I love getting stumped. I mean, 25 plus years applying to college, and I don't usually get stumped. So do you recommend using the DRT for the FAFSA? It seems flawed with reporting traditional IRA conversions to Roth IRAs.
So that is the data retrieval.
Oh, okay.
From the IRS.
That is a really good tool. I just didn't know it had a cool acronym. Thank you.
So you have to be careful if you have had any kind of rollover in your tax years that you're using. You have to be careful because it doesn't always catch that properly, because it should not be added back into your income. And when you run the DRT, you don't know what's getting placed in there because it says transmitted from the IRS. And so if you have that kind of situation, it is best to manually enter your information so that you know that that's not getting added back into your income.
Thank you. I appreciate learning something too. We've got a question from one of our attendees asking, how can you ballpark a student's expected merit aid if they're applying to the most competitive program at a school? So say they're applying, let's say, to engineering or computer science at a school where we know that's a more selective program, but the data that the school is reporting when it comes to merit aid and and GPA and test score sort of seems to be just aligned to averages, not to those more specific programs.
There are going to be general scholarships that are offered to all students, and then there potentially could be specific programs within their major choice, and that ballparking it is going to be hard to do, knowing what those things are by doing your research and knowing that these scholarships exist and knowing their potential. And again, it's about having conversations with your student going, okay, we know this is a potential, but if we don't get this and it doesn't meet our bottom line where we need to be, that line in that sand, then again, allows for conversation. I really, really recommend conversation and understanding that, and just knowing that it is a competitive market. And even in the general sense, there are competitives for everybody. And when I work with a family, one of the reports that I give them out of the software is all of the different scholarship opportunities, whether they are automatic, semi-automatic, or competitive, so they know what other opportunities they have besides the automatics.
Thank you. Can you talk a little, we were talking, I think, before we got started live about families where parents are sharing custody and how to work that into their reporting. So if someone has majority custody, the 51% rule of their kids and is the one claiming them as dependents, does the other parent need to be included on the FAFSA? And can you talk a little bit about how the FAFSA rules are changing, maybe impacts that?
Yeah. So the current law is where the student lives 51% of the time. That is the parent that is filing the FAFSA. That's the information from that family, that household. So when the law changes, it will be who provides the most support, financial support for the family. So if the parent that is the lesser income family or actually provides majority of the support, I highly recommend keeping mighty good records so that you can prove that. That would be really, really important. This is a new thing for us. We don't know exactly how they're going to verify those things or whatever. So I'm just telling everybody, keep good records.
Assault them with paper when in doubt. Give them lots and lots of receipts. Well, we've got just a few more minutes and we do have a few more important questions. I do want to just launch a quick poll, one question back to our audience to tell us a little bit about who's here with us tonight. Are you a student? Are you a parent or student supporter? Where are you in this process? Are you getting an early start on things, or you're already in college and trying to figure out how not to get out too fast? And is there a way that Apple Ruth can be of help to you? So if you could answer those questions while we're answering your last questions, we'd appreciate it. We're really happy to be able to support students at any point on their journey. One of the things that Melissa had mentioned is that test prep can be a really great return on your investment. We actually keep the data every year. We kind of go through and see how much merit scholarship our students have been awarded. And we have found pretty consistently that it's a 3-to-1 ratio, that students are earning 3 times as much in merit on average as they spend doing test prep with us. So that can be a real opportunity to open doors for students and families. And I think in this era where people talk a lot about test optional, I think the better term is submission optional. It's always optional whether or not to take the test. And then at some schools, it's optional whether or not you want to submit those scores, and they can be helpful to you. And some places they probably will be, and some places they might not be. But find out where things stand, and you can do that with us for free at a national practice test weekend we have coming up called Kickoff, and that'll be coming up in November. So you can go ahead and get registered for that now. So we'll send you more information about that when we send you the recording of this conversation that Melissa's been so nice to share with us tonight. Okay, so let's end with a couple questions for people in that high merit, low need quadrant. What are some recommendations on schools that are generous in terms of merit aid, and how do we find the givers?
So the biggest thing, as I mentioned, a resource is collegedata.com. That is the best place to go look for those schools. When you go to the financial section, you can scroll down and you can see the percentage of need met. You can see the amount of merit and all of those percentages that I was showing you on my reports. You can see all those things. You can do all that data digging yourself. It takes a little bit of time, create your spreadsheet, pull up all those things, and then look at each of those percentages. And that's where you're going to really be able to find that data, the best place for it.
Thank you. That's helpful. And I do think it's helpful also to recognize you're asking people for money. It takes work. You've got to put some time and energy into it. You need to ask your kids to do that too. And you need to have real conversations about the expectations around that. And maybe put your kids' kind of skin in the game in that process as well. I think that can be really valuable. What are some resources that you might recommend for people who are trying to seek that holy grail of an outside scholarship? What are some sources beyond? We know the colleges are the best place to get access to merit aid. What if we've utilized all those resources? Where should we head next? What are some good resources for outside scholarships?
I'm glad you asked. That was my role for 15 years in the counseling office that I supported, was getting all those outside scholarships in. And so, number one, pay attention to your counseling website at the high school where your student attends. I'm pretty sure most of them probably have some kind of database or list or something of those things that come into them, because I know I got notified all the time from outside entities. Some of them are large, nationwide kind of things, but the best places are going to be your local things. So, Chamber of Commerce, the Rotary Club, if you're a member of a credit union, maybe your place of work um, has one. I'm in Texas, and so Texas A&M is a big school here. We have Texas A&M moms clubs all over, and they sponsor a scholarship. So finding those little things that are around. Also, in the school district where I worked, the PTA, PTOs were very, very active at the elementaries and middle schools, and they provided scholarships for the kids that had gone to those elementaries and middle schools to the high school kids that were graduating. So looking local is going to be your best bet. And I will tell you that, I had multiple times that I would have students that would apply for several different ones, and they would get several of them because the numbers are small that apply. I mean, I've done this long enough that it used to all be on paper, and I would run around the school begging students, please, you're not going to embarrass us. We've got to have a scholarship application to send to these people. So, and you're going to get money for it if you just do it. And I mean, there would be times I had 6 scholarship applications for a particular local scholarship, and I am a part of my local chamber, and we do a scholarship, and it's $1,500, and we give at least 4 of them each year, and we get less than 30 applicants. So local.
I love that, Melissa. I think go local is great. I echo that 100%. Those little scholarships really add up. And one of the things, of course, you have to watch out for is what is the school going to do with the money you bring in, right? Because there are some colleges that will actually start cutting into their grant award based on how much outside scholarship money that you're bringing in. And so it can actually be more beneficial based on the way the college does their work to have many, many small awards than to have one big one. So I think that's great advice. A couple of websites I like. I mean, FastWeb is one that's been around for a long time. Going Mieyr, I like for outside scholarships. Scholarship 360 is I think a good one as well. But those are places that are getting a lot of action, and I think your local scholarships are good, are really good place to start. Melissa, thank you so much for all this good advice and information for students and families. I just want to echo how many pathways there are to higher education. There are lots of different ways to make college affordable, and lots of opportunities for families and students in many, many different circumstances. If you're the first in your family to go to college, imfirst.org is a great resource as well. There's a way, there's a path, and you will find it. If there are ways that Melissa or those of us here at Alpha can be of help to you, I hope you'll count on us for whatever we can do. And we wish you all the best in the adventures ahead. Thank you all for joining us, and have a great night.
Bye-bye.